It's not a matter of when, but a matter of how soon everything is in place.
Alrighty, what is going on, everybody? Welcome back to another CYPRX video banger. Today, I have a massive video breakdown for you all today, showing you all the commonalities via some PDFs and some video panel discussion clips, letting you all see that behind the scenes, the devil's in the details.
The devil's always in the details, right?
They're openly telling you all what's happening during this crypto winter. We have a document that was put out by the OMFIF labeled Building the Markets of the Future in collaboration and sponsorship with Aquanow and the Stellar Development Foundation from the Digital Assets Official Monetary and Financial Institutions Forum in 2023. So this year, this is all recently updated information. Again, if you all enjoy deep dives like this, go ahead and smash that thumbs up button, subscribe. We do appreciate the love and the support. It does go a long way. Shout out to the CYPRX research team for always putting in an unprecedented amount of effort to show you all what's really happening behind the scenes during this crypto winter, and that there are ongoing developments keeping you all in the loop and keeping you all forward looking for the future of this digital asset landscape. So we're going to be reading some highlights and some snippets from this PDF and then correlating that with some previous panel discussions that took place from this year. So this PDF is labeled Building the Markets of the Future. Digital Assets 2023, you can see Stellar Development Foundation right here. Let's zoom in so you all can see the text. So the PDF starts off by stating that last year, the crypto winter wiped around $2.3 trillion from the alleged value of digital assets, impoverishing cryptocurrency traders in the process. Many commentators were keen to call the time on digital assets and conclude that the craze is over. With the advent of central bank digital currencies and major economies seemingly delayed for the foreseeable future, and significant non-financial services distributed ledger tech-based applications failing to develop compelling commercial use cases, many digital asset projects have been quietly put on ice or discontinued. Speculative interest has largely charged off to the next El Dorado, which is artificial intelligence. Yet, amid the rubble, and against a challenging economic background characterized by slow growth, inflation, and high interest rates, there is an emerging digital asset infrastructure concentrated on wholesale financial service activities. Now, we do know that there's an ongoing interest still taking place in this digital asset landscape, and we've heard from systemically important individuals in the past previous panel discussions that they believe that this space is set to rise from the ashes.
So, look, I think you've got massive markets that are going to migrate on-chain. We'll probably talk more about the regulatory framework that's required to get there. But I think, it's going to be when this is sort of the underpinning of the financial system, and, the fact that assets are tokenized is almost just a foregone conclusion. And I think that's going to happen sooner than people think, particularly coming out of the ashes of all sort of the froth and excess that have been happening for the past few years leading into, FTX and the other distress situations.
Now, on the other hand, the ecosystem is entering a period of reflection and regrouping, with the meteoric rise over the focus and shifting onto real commercial viable use cases. Although we are still a long way from global regulatory consensus at a national level, the discussions are moving rapidly, and bodies like the Financial Action Task Force, International Organization of Securities Commissions are laying the groundwork for international approach. With that consensus emerging alongside institutional-grade infrastructures, regulated institutions may begin to engage with crypto assets more enthusiastically and in larger volumes as regulatory clarity comes into play.
Once the regulation is there more complete, I think there will be a very good driver for the institutions to get their money in.
I like this little part right here where it goes on to mention that the future is likely to belong to those who can most effectively integrate token and distributed ledger tech-based systems with existing ones. Some little tiny highlights right here. It says efforts to tame the crypto are helping sanitize the market for traditional finance. Again, weeding out all the bad players, getting rid of the illicit market participants is exactly what clear regulatory guidelines is going to do, which will pave the way for institutional adoption. A parallel financial system was created. We believe that over the next few years, the lines between the crypto asset ecosystem and TradeFi will continue to blur until we have one unified financial system. We have heard this before in previous panel discussions.
And so, as with all things, it takes time. And, furthermore, whilst the crypto asset class is kind of having its winter moments, and, there certainly have been a lot of mistakes happening in that industry, I think the key thing to note here is that the technology that was spawned from all of that wild experimentation and investment is here to stay. I don't know, I haven't been around that long, but I've been around long enough to know that technology never really goes back in the box. Once it's out of the box, it just keeps progressing and evolving, and it eventually becomes an integral part of our lives. And so likewise, as it relates to shared ledgers, digital assets, blockchain, like this is not going back in the box. It doesn't matter what how long this crypto winter is, this technology is out in the world. People have invested an enormous amount of money and time and talent into it. It's just gonna get better. And really what we're kind of gunning for is that it gets so good that it becomes invisible, no one talks about it anymore. I mean, it'll be bad for us because then we won't get to see you guys on stage anymore because it'll be like blockchain, womp, 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 super boring, like let's not talk about it on stage because everyone's just using it like email or like websites or mobile apps as an example.
While the appetite for exposure to crypto asset remains, many institutional players are deterred by the unclear regulatory environment.
Side and issuers, and I don't think this is decades off. I think this is years off. And I think we're going to start to see it accelerate, particularly with a tighter regulatory framework.
Robust bank-grade infrastructures is emerging that will help give TradeFi institutions the confidence to explore the crypto assets market. Though battered by scams and scandals, there is a core of value to the crypto asset class that the crypto winter has not extinguished. Now, the crypto community has spoken of an impending arrival of institutional money. We know for a fact that institutions are well aware of the opportunities that have arrived in this digital asset landscape.
Everybody's aware. Everybody's aware it's coming, and they're preparing for that inflection point where it's all of a sudden, okay, I have to pivot, I have to give up that, but I'm going to build efficiency. This is not going to be where people, I don't think, maybe some are going to be asleep at the switch, but I think for the most part, people know this is coming. It's going to change their business models, but it's going to make them more efficient. So it's one of these,
Now, this PDF goes on to confirm that as well. Institutional funds have been aware of the returns on offers in the crypto asset ecosystem for many years, but a combination of the absence of robust regulation and the related preponderance of scams and abuse practices have kept allocations limited. With the dust settling after the crypto winter, we examine the preconditions that need to be met for regulated institutions to return to the crypto ecosystem in greater number. This part I found very interesting because it goes on to talk about institutionalized third-party custody. Similarly, traditional financial service providers are learning the ropes of the crypto market to offer their customers safe exposure to the new asset class. We know for a fact that financial institutions do want to utilize these digital assets and they do want to buy them.
And then the first access point is custody. All the financial institutions want their custody in place. You've seen in the bear market in 2022, all major firms that have assets under custody or assets under administration offering cryptocurrency custody. So I'm talking State Street, Bank of New York Mellon, Citi, but also in Europe we got Societe Generale, Casais. So loads of the big firms that already are offering custody in traditional assets have the digital assets now in place. And
now, real fast, I want to pause and take your attention back to a Future of Finance PDF that we shared on the platform before, where it goes on to mention similarly the same thing, that institutional investors and their asset managers face regulatory restrictions that prevent them from directly handling assets in the same manner as individual users. This regulatory framework aims to safeguard investors holding against potential risks such as theft and fraud. And up here, it goes on to confirm that in the future, working with third-party custodians has become a non-negotiable requirement in the digital asset market for asset management institutions. The third-party custody is poised to become the foundational infrastructure of the Web3 ecosystem, eliminating vertical integration and transitioning towards a neutral and independent custody as mainstream adoption grows. It is very unlikely, back to this PDF, that institutional investors will wish to engage in self-custody of assets. We know that they're going to seek third-party custodians in order to safely store their digital assets. Now here it goes on to say institutions are coming, but is crypto still waiting? Focusing in on the fact that it says institutions are coming, we have had massive previous market participants say the same exact thing, that there is for a fact an ongoing interest in this digital asset landscape and the technological advancements that distributed ledger tech and blockchain-based solutions can provide.
When financial institutions, for them innovation is good. They look on innovation, they want to innovate, they look on the crypto industry, they want it, but they need the bridge. And the bridge is regulation. Whenever it will come from, it's good.
It says the future of finance is here. Financial institutions have been slow to adopt crypto, but digital assets are already transforming the global landscape, with neobanks and non-banks leading the charge. Digital asset firms have been preparing for institutional adoption for years. It makes sense for traditional businesses to partner with crypto industry expertise to expedite market entries while minimizing upfront costs. We know for a fact that financial institutions are interested in these technological innovations. Last but not least, the PDF goes on to confirm that in recent years, clients have been increasingly interested in buying and selling a new type of asset in the wholesale market, i.e. crypto assets. Initially, it was for investment purposes, speculating that this new technology and asset would create an improved system for the efficient exchange of value. However, more recently, it has been to facilitate to access blockchain networks and leverage this new system for some of their new business operations. The use of blockchain networks in this way is in its early stages, as would be expected of a frontier technology that hasn't yet fully matured.
But technology is driving very quick. If we see the shift of the amount of developers last year that came into the blockchain space, it's been the best year ever. It's got parallels with the internet times when all the smart human capital was shifting to the Amazons, the Apples and the Facebooks, and they're now all going into blockchain. So I think the accessibility and the user-friendliness of crypto will definitely be on the good side. If you look at monitoring, risk monitoring, and obviously reporting, I think that should be in line with all the other assets they have, and that it should be easy to integrate that into their systems they already have. There's work to be done there, but it's definitely coming. So yes, all 5 points I think very valid. It's not a matter of when, but a matter of how soon everything is in place.
Thanks.
We've heard massive systemically important individuals like Nellie Lang at the Federal Reserve mention that in the future they believe that cryptocurrency assets will be utilized for payments and not for speculative trading.
But since we think the future value of crypto is for payments and not for speculative trading,
it has become clear that through the last crypto asset market cycle that the existing infrastructure was not fit for purpose for institutions and sophisticated market participants. As a retail-led market, the risk management, regulatory frameworks, and technology capabilities, operating models, and security procedures were not at the level considered for prerequisite and traditional market necessary for financial institutions to enter. That is an absolutely massive statement. We need to see robust regulatory guidelines in order for these financial institutions to enter into this digital asset space. Now, the promise of this blockchain technology-based systems is starting to be delivered. Settlement will be measured in minutes rather than days, and assets can be programmed to behave intelligently and to follow pre-programmed logic. The result should mean a more efficient, transparent market with reduced settlement costs and increased asset utility. With that being said, ladies and gentlemen, after reading this PDF for you all, now is the time during the crypto winter to take it upon yourself to dive into research, to pay attention to detail, to focus on utility and real-world use case. Many blessings to you all. As always, understand that even though we are in a crypto winter, there are for a fact ongoing developments. There is for a fact a global institutional interest in this digital asset landscape. Don't let individuals shake you out. Keep your head down, do your research, stay in the game, have a long-term perspective. As always, many blessings to you all. If you enjoyed this quick video breakdown, smash that thumbs up button and subscribe. We appreciate the love and the support, and I'll see you all in the next video breakdown.